Morning, Wall Street winners. It is Monday, January 13th, and it looks like we're going to be off to a bit of a rocky start today. If we take a look at the Bloomberg, you can see in the futures section that all three of the US indices are in the red. The one in the red the most is the NASDAQ. It's down over 1%. And there's many reasons for that, but I think right now a lot of the narrative and focus is on the financials. There's also well, along with that, there's a lot of narrative right now around the 10-year yield hitting rising above 5%, and that's causing just a pullback generally in equities because there's now alternative investments that have a guaranteed return of 5% or more with the coupon, and if you hold them out through the life of the bond. And that is just an always evolving and changing narrative. As we're going into earnings season, I think what we need to remember here is that stocks stocks go up and down consistently, and um, a, there's a relationship between stocks going up and the amount of public interest or market interest in not just the stock, but the sector. And the sector may be as large as technology, as opposed to, say, oil. And or oil and resources. And I think we're just in this early phase before earnings. Now, earnings do need to be very good coming out, but I think we're going to be very happily surprised on the finance side because if we think about this, financial companies, the banks in particular, have all been talking about great years. Big bonuses in the fall leading into the new year. And that tells you that they're probably on track to release some pretty great earnings in this coming quarter as we enter this week, when the majority, not all, but a lot of the big banks announce this week. So I think we're on solid footing there. Where we get into a little bit more rocky footing is in some of the other sectors because some of them are more hype based than they are actual results and earnings based. So that's where we're going to have to be cautious because that's where we could see a pretty big pullback for a sector and then companies within the sector. And then if we have positive earnings out of any individual companies, those companies could shoot up after earnings. So that's, I think, the kind of market we're in for. We're also seeing a lot of changes in the global oil market right now with pipeline agreements coming to a close, Russia not supplying oil as it has for the past 5+ years. And that is causing the price of crude to go through the roof. I mean, through the roof is relative, but it's now north of $77, and it was down in the $70 range not more than a week or two ago. So it's been moving up at a decent pace. And I think that's not going to have an immediate impact on the oil stocks this quarter because it's going to affect their cash flow and their earnings next quarter. But it does set them up well into 2025. So I think they will see a moderate increase into earnings. And then if future forecasts come out to be even more rosy than they were expected to be, that could see a jump in the oil sector and oil refining stocks. So let's see where we are. We've got the crude is up at 77.51, so up almost $1 there. Looking like it's likely getting up to the $80 range within the next week or two. We have the 10-year bond yield up close to 5%, 4.77 right now. We have the NASDAQ futures down significantly, well, significantly, down 243 points. It's not even a percent, but they are, sorry, it is a percent. I think it's over 1%. Yeah, 1.15%. So again, um, probably an opportunity to maybe make a purchase into some of these good quality names, but maybe not a full purchase. Buy 25% of what you were thinking. And then if it dips further, you could buy another 25%. Um, and over the course of the day or a week or 2 weeks as we lead into tech earnings a couple weeks out, you can accumulate a full position and have dollar cost average into that position. And if the earnings are positive and there's an earnings surprise, you might get a nice uplift there in that stock. The VIX is up above 21. So A lot of turmoil going on right now. There's a lot of things about to change. So this is a very risky time for the market. We've got the new administration coming in office. We have the TikTok ban that's going to be a decision around the ban being announced on the 19th. We have the wildfires that they can't get under control in LA. We've got these oil shutdowns from Russia to other countries, mostly in Europe. We have a ton of different things going on that are just leading to some unease and unrest. And with that comes increased volatility. So if we scroll down through, oh, and we have the longshoremen who run the ports in the east. Now they have negotiated a tentative settlement. So that's a positive, but they were about to go on strike. That sent stocks of big box stores down, fearing that they wouldn't be able to get their goods for certain parts of the season, and that may impact their revenue and earnings numbers. But that has been, at least for now, resolved. And so Costco on Friday shot up and caught a bid there. It's off slightly. Lululemon's been doing very well, coming back above 400. Looks like it's going to get back above 400 again today. It did have a drop last week. Walmart hovering where it is. I do expect we'll have some good earnings out of Walmart, though. Might give them another bump up into the 100 range as we hear from them in the next month or so. Home Depot, a stock that was in the 410, 420 range in the last month, dropping down into the 300s, but slowly making a recovery. I think, again, with rates now, interest rates likely being maintained and not lowered from where they are in the US, it's going to keep a lot of Americans, if they have a low interest rate mortgage, in their home. And it's going to prevent them or help them make the decision not to make a move and sell their house, lose that low rate, and then get into a higher rate. So instead, I think what we're going to see is a lot more spending at the Home Depots of the world, those home improvement stores, because people are going to spend on making improvements in their home. I think it's going to be good for the services sector and it's going to be good for the big box stores. So I think Home Depot is in a really good position here. We've also saw Friday. Now, it could have been a misprint. There will be a correction if needed at some point, but the jobs report was extremely strong on Friday. So if the jobs report was strong, it means people are employed, wages are increasing slightly, but they are increasing, which is good for the consumer, and they have money in their pocket to spend. So stores like the Home Depot should have a good year if that kind of thing continues. Now, where they could get really slammed and hurt is with these tariffs or the threat of tariffs. So if Trump comes through and puts tariffs on things and that raises the cost of everything, that's going to drive up inflation. And when rates are high and inflation's high, not a good mix, likely going to lead to an economic downturn. But we'll have to see how that plays out. But that is something to be aware of on the horizon. Humana up 12, almost $13 in the pre-market. Not sure what's going on there. Um, You've got the transport stocks, both having terrible days on Friday, and it looks like JB Hunt is off again in the pre-market session. Oil should be in the green for the most part. You can see that the majority of these are they're not up nearly as much as I would have thought they were. I mean, Chevron's up a buck 11, Valero 53 cents. I mean, to me, with the jump in crude going from 70 to $77, these things should be up 5 to 10% from where they were a week ago, and they're not. So I think they're wait. It's like the Jack in the Box, and it's yet to have the lid opened and the thing pop out. I think these are going to pop significantly at some point in the month of January, and we're going to see a rapid increase in these oil names. Now, that may be tied to earnings and around the release of their earnings, which is coming up in the next couple of weeks, or in the majority of cases, or it could be tied to another event that we hear about from the news, or a geopolitical event. But I do think that we're going to see a big run up in oil in the month of January. Tech, tech is getting slammed. Nvidia, as it drops. I mean, Nvidia's got some good news out, some potentially bad news out all the time, but today in particular. And I think that anytime Nvidia drops, it's a great opportunity to buy into Nvidia. This is a stock that is a leader in the market, in market share, in everything it's doing around AI. Now, AI is not a fad. It's probably not going to take off as quickly as some people had hoped, but it is gaining in adoption in certain sectors very quickly and others less quickly. Um, but it's definitely an area that isn't going away, kind of like the internet, which never went away. So I think there's a lot of opportunity here as a long-term play. And when I see NVDL down $6 pre-market and going to be at $61, I think that is a definite steal at that price. Because by the end of the year, NVDL, if it's not $95, I would be very, very surprised. So that's where we are with Nvidia. Micron has been holding its own, but it looks like it's off today. All the semis are kind of, they had a good week last week. They're now kind of coming back and getting kicked in the pants. The cybersecurity firms, CrowdStrike, and others are getting hit today. They have had a bad week or two recently, but they did have a bit of a run up into that. So going to be staying away from that. CRM has dropped significantly down into the 310 to 20 range. Looks like it's off again today. Net had a double upgrade last week and hit 114, 115. It's off. It was off Friday. It looks like it's off in the pre-market, but just because the overall NASDAQ is down. Um, Again, where you want to be looking for opportunities here in tech, I'd be looking at the big names like a Microsoft that has normally hovered around the 430 range and should break through 430 with good earnings. And if it's down in the 418 or 414, 415 range, if it drops down to maybe 409, that would be under 410. That would be an incredible buy for a buy and hold for the year, because I think you're going to find that that kind of a company, stable across sectors in terms of who it sells to, a large customer base, tied into AI and the AI play with the Azure cloud, it's going to do extremely well. ARM was up into the mid 140s. It's now down. It was fighting that lawsuit with Qualcomm that it lost. It was down in the 120s. It's now back into the mid 130s, looking like it's going to end or start the day in the low 130s today. So again, I wouldn't be jumping into anything here in the tech space in the first 30 minutes of trading, but I would be keeping an eye out for what it looks like. Meta dropping back down into the 500s, I think is an extremely amazing buy going into earnings. This is a standout in the Mag 7 for this year. They, in my opinion, have the most to gain with AI. They've got a great ad revenue business. They've got an incredible Reels on Instagram feature that competes with TikTok. If TikTok gets banned, that's going to help Meta out. I think Meta is one that you need to be invested in this year because I think it's going to have an incredible year. And then Google as well should have an amazing year. It was up in the low 200s. It's now going to be, by the looks of it, it's down in the low 190s. And that's a bit of a steal. The market's just opened at 9:30. And then we get into finance. And finance had a horrific day on Friday, and some of the stocks are starting to come back. JP Morgan up 83 cents in the morning session. Goldman just down a penny. I think we're going to see these stocks come back today. I think that the financials got hit hard Friday. They're going to start recovering, and if earnings are good, which they expect, which I expect they will be, I think they're going to shoot. They're going to shoot up further after earnings announcements starting this week. So that's where we are on January 13th. Good luck with your trades. And if you're liking these videos, please hit the like and subscribe button.